Great. So the first thing that we want to do is to take a look to see what's the news for this week. Last week was a um, crazy week, very choppy. We had Nvidia earnings, which you attended the seeing you got a question.
Yeah, I can't see your screen yet. I don't know if it's just on my end.
Oh yeah, nope, I haven't shared my screen yet.
Okay.
All right, let me share my screen. Boom. Here we go. All right. So this is TradingView. This is TradingViews. I guess they're having a Black Friday sale up to 80% off, or plus 1 month free. These sales are pretty good. I think that these are like the best sales of the year for TradingView. So if you're looking to upgrade your TradingView or get a better subscription, I think that taking advantage of the Black Friday sale could be a benefit. All right, so let's look at, where do I want to go? I want to check the economic calendar. So I like to check the economic calendar before the week starts because I just like to know what's happening. Lately, the economic calendar hasn't really been too much help because the government was closed for over 40 days. But now that the government is back open, we can reliably look at the economic calendar to see what's to come for the week. So what I like to do is go here, go to products, calendars, and then we can go to economic. And then we want to look at the week of the 24th, and then scroll to the top. So I think a thing that happens with the economic calendar that it automatically toggles on the only high importance, which means that it's going to block out. 1 second. It's going to block out the unimportant events. So you click on it, it'll show all the events, which again maybe too much. So only high importance may be toggled on. So if you see like no scheduled reports, it doesn't mean that there's no reports. It's just that TradingView is filtering them out. So what we can see on Monday, no major scheduled reports. Tuesday we do have PPI month over month and retail sales month over month. After that, we do have on Wednesday, we have a few things coming out. We have PCE, which I think is going to be like the biggest thing, in my opinion. We also have some durable good orders, personal income month over month, and personal spending month over month. But I think that yep, I'm looking at that too, Mark. But I'm thinking that the PCE is going to be the biggest thing. You got PPI on Tuesday. Biggest thing on Wednesday is going to be PCE. And then Wednesday, you have, I'm sorry, Thursday, you don't have anything. Friday, you don't have anything. So let me take this off to see, like, is there anything that may have slipped through the filter? Nah. Okay, cool. You got Fed balance sheet on Friday, and you got nothing on Thursday. Oh yeah, Thursday is Thanksgiving. I'm forgetting. Okay, so Thursday is Thanksgiving, so I'm thinking the market should be closed. Friday is Black Friday. Market should be open, and then Monday is Cyber Monday. So a lot of people have been asking, do we have any Black Friday sales? Yes, they will be announced on all channels tomorrow. So if you're looking for any any type of sales, we'll have them posted tomorrow. So if you have any questions about that, it'll be answered again tomorrow. All right. With that being said, we already see what's happening for the week. Also, what I like to do is check the S&P 500. The S&P 500 is kind of my gauge on the direction of the market to figure out which way it's going to go. I have my indicators stripped down. I need to add them back. I was meeting with one of my mentees, I think earlier over the weekend, so I had them taken off. All right. So last week, the market was, we had a red week. Let me go to the weekly. Yeah, we had a red week on the S&P 500. Friday, the S&P 500 did close green. We had a crazy day Thursday because of NVIDIA earnings, which I told, again, if you were in that that Wednesday night option class, I told them exactly what was going to happen. I said, if NVIDIA does not break and hold 195, that it was going to be coming back down to 180, and it did just that. It literally hit 195. It struggled at open, and then it slammed all the way down to 180. Is what we had for support. So we look at the NVIDIA real quick. We'll come back to the SPY. And the reason why I'm talking about NVIDIA because it was the key driver of the direction in the market on Thursday. So you can see that earnings happened, and you know, people were rejoicing that they beat earnings, which honestly, in my book, beating earnings by 3% is not good. Especially when we already predicted that, you know, the company was going to be earnings, but beating earnings by 3% top and bottom side, especially when the stock is priced to perfection, it's kind of scary. That to me is 3% away from a miss, right? So that means that, you know, as long as NVIDIA executes perfectly, they should be earnings, which again, their next earnings, I'm pretty sure they're going to beat that as well. But once we got up to, this was the levels that we were watching. Again, if you're in that class, you know, these levels were already set. So it went up to 195. And I was willing to play calls above 197.50. It hit 195, and then it came all the way down. It even broke lower than that 180 and hit this 178 before bouncing back up to 184 and then coming back down to 178 again. So NVIDIA was pretty much the driver of, you know, the driver of the market being pulled down. I also told the group that looking at the S&P 500, so we do have 4 phases of the market. And if I pull up, let me show, and people know, if you've been in these sessions before, you know about my 4 phases of the market idea. And it's not even my idea. It's something that, you know, I think most traders should just be aware of. So let me bring it up. I'm pulling it up on my other screen, and I'm gonna drag it over here. 4 phases of the stock market. It's real simple stuff, but it's good to use. Let me get an image. Where's that image? I like this one. I think this is one. Yeah, yep. This is the one I used last time. Let me pull it up here. Boom. Drag it over here. Oh. All right. So 4 phases of the market. This is one of the things that I used to predict the last downtrend in the market. So this was what, February of last year. I mean, February of this year. We had some accumulation, and I had been telling the group since December of 2024 that we were gonna go into a downtrend because the market was accumulating. I'll show you what I mean. I'm sorry, it was going through distribution. So you got 4 phases of the market. You have accumulation, which means that, you know, the market is going to consolidate at the bottom, and then it's going to prepare for a move up. So you have the uptrend, and then you have distribution. Distribution is where we are today, to where the market after an uptrend starts to trade sideways, and then you have a downtrend to where this happens after distribution. So you know, key players in the market, they're buying, they load up, they buy low, play the uptrend, and then they go into distribution to where they're slowly getting out without causing the market to crash, and then they just let it tank. So this is where we are now. We're in late stage distribution. I also ran some AI analysis just to make sure that I wasn't, you know, that I wasn't losing my mind, and you know, AI agreed with me as well. But this is where we are now, between 3 and 4. And so after the downtrend of markdown, we're going to go into accumulation again, and then it starts all over. So this is where we are now. Again, we just had an uptrend. So let's start back at this one. So we had some accumulation. I mean, I'm sorry, we had accumulation, what, back here, accumulation, uptrend, distribution, to where, again, if I draw my horizontals, we had distribution last time, right? This is where the market, and I can also use my path tool to draw some. So we had accumulation here. We had an uptrend. I'm just drawing the macro, right? We had an uptrend, boom. We hit this resistance point, and then we just kind of chopped up and down in this area. And once we chopped up and down in this area, this is distribution, right? Distribution comes after the uptrend. So we had chop, 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 and then we fell out to the downside, to the downtrend. Then we had accumulation right here again. We accumulated, went for a crazy uptrend. That was a rip, crazy uptrend. And now we're getting to distribution again. All right, so let me move this out of the way. So now we're getting, again, it looks just like this. It starts, the market at a top of an uptrend starts to trade sideways. It plays the same range without breaking new highs and new lows, and then it falls out the bottom side. So here, we already topped out. We're trading within this range, and now we're testing low. So I'm not convinced that we're out of this part of the phase until, like, if we're like, I know a lot of people are saying, well, the S&P is going to 700 by the end of the year. It could. It really could, but I'm not convinced until we get back above 675 to 685. If we get into that 675, 685 pocket on the S&P 500, cool. I'm fine with playing whatever the market gives me. But right now, it seems like we have a lot of downwards pressure on the market. Also, for my pattern, people were making a head and shoulders. I also mentioned that Wednesday before NVIDIA earnings is that, hey, we have a shoulder, a head, and another shoulder, right? So a head and shoulders is a bearish pattern that, pretty much tells you that the market is going to be going down, after breaking the neckline. So we got shoulder one, head, shoulder two. And if you want me to just draw it really quick, we got shoulder, head, and I'm just going to draw a rough shape. And then we went up, and when we came down, we got another shoulder that's being formed. So if we play this pocket without breaking 675 again into that 685, we're still working on this side of the shoulder. And if we go back down and test this 650 one more time, I have us breaking and moving lower. And if we break and move lower, currently the low I have between 638 and 632 on the SPY. If it breaks below that, then I got about 616 to about 600 even. So right now we're in a period where AI, the profits from AI is being questioned, which I had already said that AI was in a bubble. Some people thought I was crazy. I said this like 2 or 3 weeks ago before I went on vacation. And when I came back, the market was in shambles. So again, this is what we need to watch on the S&P. But again, what I like to do is just be able to take a look at the market to find opportunities. And the S&P is one of my stocks that I like to reference a lot. With that being said, I will go ahead and pass it over to Mark so he can cover the pattern of the week, and then Mark will send it back to me so we can look at the picks that I have for this week.
All right, I appreciate it, Ladarius. Give me 1 second to share my screen. It's my pattern not coming up. So I'm going to share. Boom. Oops, it's not the right one. There you go. So, all right, so this week I'm going to go over 2 bearish indicators. Just because the way that the stock market is moving, for the tech at least, we could be potentially seeing what happened a few years ago to where we're in the downtrend in the bearish market. And it's always good to know how to trade the stock market going either up or down. I have to reshare my screen. There we go. All right, perfect. Yeah, so it's good to know how to play the market either up or down. So since the market is starting to look like it's going to start to trend downwards, it's good to understand how to trade the bearish patterns and what to look for and how you can execute a trade overall. But this week we're going to talk about the double top pattern. And this pattern is basically used to indicate that the stock price is about to start to go down in value. So stock price was once going up overall, and then it reaches a certain peak. And what happens is it creates an M shape, like you see here, this little M shape. And you'll see a live example of it, but it creates this M shape. And once it breaks beneath a certain value, you can then go ahead and get into some put options to help hedge your portfolio or just to make the profit on the put options overall. So the rules that I like to give people anytime you're looking at double top patterns is the first thing is you want to check out the prior trend. You want to make sure that the stock price has been going up. And then once it started to go up, you want to go ahead and draw out your support and resistance lines. You just want to make sure that for the resistance level, it's touching this level 2 times, and then you'll see a pullback happen. And then for the support line, when it tests this level, you want to see it tested twice. And on the second time is if it breaks beneath that support line, that's when you will go ahead and get into the stock. And then the trend reversal is just going to be, that's what happens once it breaks beneath the support line. You can signify that, okay, the stock is going to continue to go down, and you'll have that trend reversal happen. And let's look at because I don't want to show that example. Let's look at a live example. So let me switch to the live example that we traded about a couple of weeks ago. I want to say, which was NVIDIA. Traded NVIDIA. Oops, let me go ahead and clear these things out. Okay. So again, when you're trading the double top pattern, the first thing you want to signify is that the stock price is going up in value. So from here, we have NVIDIA was at about 179. And from there, it went all the way up to roughly 209. We can call it 210. We'll say 210 is where it went to. Once it hits this level and we see rejection, we can signify that, okay, well, we know that our support level, our resistance level, excuse me, is going to be here at about 210. So that's going to be our top level of resistance that we said we needed to draw. And then once it went down, it created, once it tested this level, it went down and it tested a support level. The support level was at about 202. And this is a really important level to take note on. You want to take note of where you started to have that support rejection at. So we have support rejection at 202. And then from there, it started to go up. And then it pulled back, which ultimately created what it looks like an M shape. So this green area is an M shape. You can see it's creating an M, and that's known as the double top. So how can you play this? Well, if we go ahead and get rid of this level right here, and then we'll go through the replay. We'll get it to about right here. So normally when you see this pattern forming, this is how you're going to be trading and looking at it. So you're going to draw your trend line. It's going to be going up, testing, pulls back, testing support, goes up. So you're going to be trading it from this level. You'll be looking at it like this. And what you're looking at is that you're saying, okay, where's my resistance? Resistance is at 209. So you know that the stock price is going to come and try to test this 209, 210 range. And then once it tests this level, you're going to start to see it pull back down and reject. And you're going to see it pull back down and try to get back to this support level. And again, this support level is really important because this is the level when you see the stock price break beneath it. This is when you're going to start to get into your trades. You don't want to get into your trades while it's up here because it's a little risky, because this could be going up more. This could be a bullish flag, which means that the stock is going to go up. So you want to make sure that the stock price breaks beneath this support level, because that's going to help you, or it's going to give you a higher percentage of a chance that you're going to be correct and you're going to be able to be profitable in the trade. Does that make sense? Does anyone have any questions so far? Yeah, that thumbs up. Perfect. All right. So, all right, looking at this trade, you're saying, okay, well, it's potentially forming a double top. When do I get in? So again, you'll get in once the stock price breaks beneath the 201. You can get in early and be aggressive. That's your prerogative. I would just be a little bit more conservative and wait. Just from experience, I have been in trades where I thought it was going to keep going down. The stock price tests this level and it does go down to 202, but it doesn't go any lower than that. And it turns back around and we're still in the uptrend. So I just always tell people, just let the stock price break beneath your support level so you can signify that it is going to go down. And then you also want to look at your other indicators. You want to look at your RSI level. Is your RSI, because we're bearish, we want to see the RSI level in between 55, 45, pointing downwards, not pointing up, but pointing downwards. You want to have your stochastic RSI level high. So right now it's pretty high, it's in the overbought region. We know with the stochastic, when it hits 100, it's going to come back down to 0, vice versa. If it's at 0, it's going to 100. So when the stochastic is at 100 and is going back down to 0, that means your stock price is going to be decreasing as well. So that's another good indicator. So when you see this high stochastic RSI level, that's another good indicator that the stock price does have room to the downside. Then you want to also look at your MACD. You want your buy-in, you want your blue line. You want this blue line pointing downwards and really close to this red line. The closer it is to this orange or red line, it's orange. The closer it is to this orange line, that's going to be a higher chance of you being correct, and that's going to be you have a higher chance of the stock price going down, especially when it's close and it's about to cross over. Now, if it's pointing down, you can see it decrease in value, but again, it's just a little bit better when it is crossing down. And what happens is the closer and closer, or the more and more this price goes down, the closer and closer it will be to a crossover on the downside of the MACD. So that's gonna, so there's by the stock price driving down, it's gonna also drive down this line, which helps indicate that it is a downward trend. And then for me personally, the last thing, and I didn't put this on the checklist, but the last thing that I would look for is my target price. I want to figure out, okay, well, when I get in this trade, where am I going to get out? Because I know that it's not going to just go all the way down to zero. It's going to stop somewhere. And for me, I like to use a rule of thumb. You can, if you don't have any moving averages near it, you can say that it's going to come all the way back down to 180. That's a fair thing to say. What I like to do is I like to just give myself, I like to look for other support resistance areas, and I like to look at my moving averages. So if I have a moving average that's really close, which is like this 20-day, I typically like to give myself this 20-day moving average as my target price, or I'll make it a little bit higher up. So I'll find the next support level and say, okay, well, that's where the target price is going to get. When it gets here, I can go ahead and shave profits. I can go ahead and take profits and be done with this trade, look for the next one. So if we was to draw a target price, I would draw my target price somewhere at about 195, 190 could be a good one. Again, that's that moving average would be at about 190. I will probably make it my moving average just because I know it's probably going to try to get to my moving average. So I'll make it about 190. But again, if you want to be more conservative, you can just go up a little bit to the next support level you have, which is going to be at about 195. That's going to be a nice level to play in. And from here, you're looking at this. All you're doing is at this point, you're especially when you're doing options, you want to make sure that you have all your information set up and you have your place set up. You know which expiration point you're going to get in. You know what contract you're looking for, so that when the time comes, you can just go to it and go ahead and get in. So at this point, all we're waiting for is the stock to break beneath 200. So once it breaks beneath my support, that's when you'll get in the trade. And once it hits the target price, you'll sell it. So you'll see that if we go through, we have another test here on this resistance level. And then from there, we're predicting it's going to drop. This candlestick, it dropped. So again, sometime on this candlestick and on this day is when you should be looking for your trade. Once it hits 201 and it looks like it is setting up nicely, I will go ahead and consider getting in. And if you look at it from this point, you can see RSI level is pointing downwards. We're inside that sweet spot. Stochastic is pointing downwards, and we're getting closer and closer to a crossover on that MACD. So the MACD is now pointing downwards. That's a good indication that once it this stock has room to the downside. So all of those things is going to point me to say, okay, well, my moving average is where I'm going to get out. So I'll be getting in the trade somewhere on this candlestick, and then I'll be getting out once it tests this area. Any questions? You can see it tested this area. Should be out this trade. Again, you can probably get it to 108, but that's up to you. You see it got all the way back down to 180, and now it's starting to try to turn them. Check the chat, see. Any questions? Perfect. Yep, Joseph, you have a question?
Yeah. What time frame do you use? Is it per day?
Yeah. Yep. So this is the daily time frame. So each candlestick represents 1 day of trading.
Okay.
And
Thanks.
when I'm doing my tradings, I like to use the day chart to just signify, okay, because I always like to give myself room for anything that can potentially go wrong for it to recorrect itself. So I always like to look at the daily chart just because I can say, okay, well, at least for this week, I know that it should be on the downtrend. So it may not be it may be going up today, but overall, we still have room to the downside on this. So I always just like to look at the daily chart to get into my play. And I play my plays I stretch it out for like 3 months when I'm doing the option plays, 2 to 3 months. Typically. Question? So I have another question.
Yeah, I have one more.
Mhm.
So If you were looking at it as a bullish flag, I've heard people say that like it has to go past the middle of the halfway past the middle of the bullish flag to know that you're out of that bullish flag pattern. So how do you kind of um protect against that risk? Like if it's going down but it's not past the middle of the flag and it might go back up, like
Mhm.
how do you kind of like mitigate against that?
Yeah, yeah, and that's where the other indicators come into play at, because if you have a high RSI level or stochastic RSI for that point, and it's coming and it's pulling down from 100, this stochastic it's trying to get back to zero. So that alone right there just lets me know that, well, this probably doesn't have enough room for it to turn around and go up. It doesn't have enough momentum for it to go up. And if I'm gonna if I'm getting in a trade and then let's say it rejects on this level, I have stop losses, right? I want to make sure, well, if it gets to this level, this is when I'm going to get out, because you don't want to lose your entire investment that you're putting in there. So if you're investing $100, you might only want to lose $20. So if you start to lose $25, you might just have to get out that play and just find something else in the same aspect.
Perfect, thank you.
You're absolutely welcome. Great questions. Any other questions? Time is that? Okay, perfect. All right, so I do have one more candlestick pattern. Just give me 1 second, and it kind of ties along with this one. That helps throw it all into play. And actually, your question can help answer that as well. Let me get to it. Should have it just downloaded because I just uploaded it. Boom. Man, I don't know how to. Share this tab instead. Never knew that. Learn something new every day. All right, perfect. So hanging man pattern. Hanging man pattern is another bearish indicator. And the way that this pattern populates, it creates what looks like a hammer. So it creates it looks like a hammer. Yeah, it looks like a hammer. I have nothing else to say about it. But it looks like a hammer. And when you see this pattern forming, if the stock price has been rising, that means that it's basically hitting this top resistance level, and it's probably going to have some type of pullback that happens. Some examples are here where you can see stock price was going up, created this hammer pattern like you see here, and then it started to pull down. Right here as well, stock price was going up, created this hammer pattern, started to go back down. So if we go back to this NVIDIA play and we share this tab again, and then we go back and we're going to leave, we're going to create a new, just so we can just pinpoint just that candlestick. This candlestick right here, while it's flipped upside down, because sometimes your candlestick, your hammer patterns can be flipped upside down where the top wick is longer than the bottom wick is fine. But you can see that this is a hammer pattern that's forming. So this is another indicator to let us know that, hey, the stock price is hitting a high right now, and we're probably going to see some type of pullback happen. So that's another indication to say, okay, well, this is a good double top to play. A lot of times when you see the double top paired with the hammer, again, that's a good indication that you're going to see that downtrend happen. And pair it with all of the other indicators as well, you can get into the trade. I just like the more you use your indicators and the more you have to whichever way you want the trade to go. So if you want it to go downwards, the more those indicators are pointing downwards, the higher chances you have of being correct. I have a question. See somebody raising their hands. Go ahead.
Yes, Mark. So if there are two hammers, like you can see here, does it mean anything?
No, it's just two hammers. Yeah.
Okay.
It's just two hammers. The questions. Can the right or left side of the double top be higher or lower than the other, and by how much? Yeah, you can sometimes see it where the top side, where one side is higher than the other one. By how much? I wouldn't say a lot. Like maybe I would say at about 213 somewhere about 213 to, yeah, about 213. I would say, okay, that's still a double top. If it's at about 215, I wouldn't be calling a double top. That could be something totally different. It could be making a rising wedge or something like that, or it could just be the fact that this is a drawing the blank bullish flag and it's broken out and it's starting to increase. So if it goes too high, like 213 would be nice, especially if the indicators are still setting up nicely for you. I can say that's fine to still be a double top. But if it breaks too high, about $5 up, be a little careful because that could be a bullish flag. And again, when you're trading it, the top side shouldn't necessarily worry you. Is once it breaks beneath the support line, is what you're really looking for. You want to see it break beneath that neckline, that support line, and that's when you'll be getting into the trades. I don't get into the trades until after that. I'm not aggressive with it at all, just because I've been burnt before. Great questions. Do you have a profit or / sell target? Yeah. So again, this support right here that I drew. This support here that I drew at 193. That's going to be where I'm taking profit at. So when it got to 193, and I want to say in the Discord, that's when I got out. I might have got out. I can't remember if I said 193 or the moving average. But if I chose this as my profit, my take profit, excuse me, I'm losing words. If I chose this as my take profit, that's when I'm getting out. So once I'm in the trade, once the stock hits this at 193, I'm out. I don't care that it went all the way down to back down here. That's fine with me. That's just money that I lost, but I'm still in profit. I made about 80% on this play, so I'm fine with that. I'd rather be safe than sorry. I've been greedy before where I say, okay, I think it's going down even more, and it turns around and I'm like, well, I just lost. I once was making 50%, now I'm lost. Now I'm losing 10%. I should have just took the 50%. So, all great questions. Any other questions before I pass it off? Yeah, that's a good question. So for me, my stop loss, it varies at this point in my trading career. Honestly, I used to say 5%, 10%, but it just depends on how confident I am in my chart and analysis, and how confident I am in what I see is happening, and not to get taken out of trades early, because sometimes you can get. When I was doing 10% losses, I was getting basically kicked out of trades early. So I just say, I'm just going to watch it. And for me, that's another reason why I'm using the daily chart to trade, because I know, okay, well, maybe today I'm down 50%, but overall this probably is going down. So I'm just going to go ahead and stick it out at least just to see. And it works for me. But yeah, for the stop loss, I would say if I'm the beginning me, let's say 10%, 10, 15%, and then I'm trying to get like 80% of my money back. And it depends on how much money you're trying to get back as well. If you're looking to get 50% back, then maybe like 5%, 7% might be a good stop loss to have. But yeah, good question. All right. So I don't want to take up too much more of Ladarius' time for him to go over the picks. So I'm going to pass it off to him. I appreciate all of the questions. Thank y'all.
All right. I appreciate it, Mark. It is no problem when people have questions, especially on this part, because I think that patterns can definitely help, when you're trading. When investing, maybe you're looking at fundamental analysis, but technical analysis, and patterns definitely help for trade. So, and if I can't get through all of the picks now, I'll just post the picks in the Discord. If you haven't joined the Discord, we do have a goal of adding, again, 100 free members. What I'll do is add the link to the free Discord. We also have a paid Discord. If you're interested in joining that, you can hang around a little bit afterwards. We can talk about that. We're not going to take up that time now. Also, I do have slots for mentorship, both group and one-on-one. So let me get you all this free link first, and then we can look at my picks. I got 1, 2, 3, 4. I got about 5. Not well. I'm gonna look at Bitcoin, but I don't count Bitcoin as a pick. I just buy and hold Bitcoin. But it's good to see what levels we can get this Bitcoin at. So title this free Discord. I don't know when that's taking that. Boom. There you go. That is in the chat for you all. All right, let me share my screen and get the show on the road. All right. I got a few picks. These are not all the picks, but these are just a few picks that I've been watching. All right, so I got Google to start the week. So Google has been climbing even while the rest of the market has been getting whooped. Buffett put, I want to say, $4 billion into Google out of his war chest. Berkshire, they're sitting on 380 billion in cash. I want to say it's about 380 billion right now. And they're just waiting for everything to fall apart so they can buy, things for pennies on the dollar, which is not a bad idea. I think they've been saving up for or they started to increase their savings a lot within the last 3 or 4 years, for a nice drop. So smart move on Buffett's part, but Google has been running hot ever since. So right now we got a 68 RSI on the daily time frame. We also have Google forming a bull flag. So Google, the flag pretty much starts at about 250. We got up to about 292 before we started to consolidate to the side. So I can just put one of my horizontal lines here. So again, we ran up, hit this level, we kind of chopped below it, and then we broke above it, came down for a retest, and now we're pushing back up. So the level that I want to see us break tomorrow is 305 in this level. So I want to see us make this breakout at 305, so then we can play calls to the upside. Also, we have a pending MACD crossover, which is sweet. Actually, I think that crossover happened. Yeah, that crossover happened. So it looks like we should be getting some bullishness on Google. Again, when you're reading the MACD, if you have the orange line on top, that means that you have some seller pressure being applied to the stock. Once the blue line is on top, that means that buying pressure is being applied to the stock. So right now, the blue line is curving up. It's overtaking that orange line, and then it should be moving us to the upside. So nice MACD crossover. Again, the RSI is a bit high, so you have to be careful with that. And then if you look at the stochastics is our momentum indicator. And the number that I'm keying in on right now is the blue number. The blue number is at 47, almost 48. This indicator can get all the way up here to 100. And we can see that once this indicator hits 100, it tends to cool back off. So we just came off of a hot run to 100. The beginning of November, Google cooled off or traded sideways, came down by November 14th, and now we're back up. We're back up to 47 again. So I'm thinking about taking this all the way up to at least 80, between 80 to 100 on the stochastics, because again, this tells us the directional momentum. And right now, Google has a lot of upwards momentum. Again, the only thing I don't like is that the RSI is pretty high, but as we can see, Google can over-rev on the RSI quite often. And so this is the one I'm watching. Again, watching this tomorrow. If we get a rejection at 305, and it looks like we may be coming back down to this 290 area to test that support one more time. But 305, or you can say 304.50 is where I'm looking at the test. And I see what you're saying in the chat. The bot called out calls for Google last week. Yep. If you're in, that's one of the benefits of our paid Discord. We do have a pretty good options bot. It scans the market and tells us how much money are going into these option contracts. So if you're big on options or you want to get good at options, I think that, again, looking at our options bot would definitely help, because it's a vote of confidence when you look at the options bot and you see someone just put $5 million on Google calls and you got Google calls, right? It's kind of like, oh, okay. It's a vote of confidence when you know there's 5 million behind the same setup that you got, even though you didn't put 5 million on it. So appreciate that, Devender. But yeah, that's what I have for Google. And let's keep it moving for the sake of time. What time is it? Yeah, we got like 7 minutes. All right, next stock, Apple. Reset my charts on Apple. RSI is about 59, which is nice. Apple has been testing this 275 range a lot. It's been trading in a tight range, honestly. Like, really, it's been trading. Let me see. We count the bodies. You got about 265 to 275 is what Apple has been testing. It looks like it's making a double bottom as well. So down, it has a little square bottom. So down, bottom, up, bottom, up. So what we need to see this week is we need to see Apple break 275 with strength. If we break 275 with strength, then Apple should continue its run on up to 300. So right now the RSI looks nice. The MACD looks pretty good. We have we do have some selling pressure because again, if you don't know how the MACD works, it's an oscillator. So any sideways movement, the MACD is going to read as a cooling, even though the stock isn't moving down gradually. And so right now we're seeing that we have some weakening in the sell trend, which means that buys are starting to come in, which is nice. Also, if you look at that directional momentum, again, 17 out of 100, we got a lot of space to get up to 100. So the fact that the stochastic RSI is low is a good sign that if Apple decides to move, if Apple decides to test that 275 to the top side, that we could break and, like I said, continue our move on to 300. Also, Apple is making a bull flag as well. Again, a bull flag is just a strong move up into consolidation or a slight pullback, and then another strong move back to the upside. All right. The vendor says it is still a good time to DCA into Apple. I like Apple. I like Apple. I told people to buy Apple at 195 when Apple was having issues with the AI situation. Nobody wanted it. They felt Apple was lagging. I told them don't bet against the fruit. No one wanted Apple, but now Apple is the thing. So to DCA into Apple, honestly, what I would be doing, again, it just depends on when you plan on selling. Again, it is not financial advice. I'm not a financial advisor, but I do think that buying Apple anywhere between like 250 to 275 just for a swing is not a bad idea. That's what I'm looking at doing. I'm also looking at Apple calls. Again, I just needed to go above 275. I needed to break that 275 because we had so many rejections. But Apple definitely setting up nice, and to DCA into Apple as a drop low to this 265 support would not be a bad idea. All right, moving on. Trying to get all this in before time. We're at 6:56. All right, so this is Berkshire. If you've been in the Discord, you know I've been buying Berkshire. I also liked Berkshire when it was in the 480s. So right now, Berkshire B shares, we're playing a wedge. Right, so if we look at this, Berkshire has been forming this wedge pattern. It did break out of our wedge back on November 11th, and it broke all the way up to about 516 before coming down to test that diagonal and move back up. So Berkshire could be forming a flag as well. Again, strong move up, slight pullback. And again, a flag is broken when it breaks below 50% of the flagpole. That's another thing to think about. So if we go back up, if you see, I'm telling you right now, you see Berkshire back at about 516, 517, just watch for a potential break up to 520. If it breaks that 520, I have it playing this range between 520 and 538. Again, we were playing this wedge, and this wedge this wedge pretty much should set us back where we started. And we started this wedge back at 538, 540, and that's where we should end up at. So I really like Berk B. Let me reset the charts. Berk B shares. Also, we have a 56 on the RSI, but again, I'm just waiting for a turn up to the upside. So we'll see what happens with the market. Again, we got a lot of news coming out. We'll see which way the market turns, and then it looks like Berkshire has been pretty resistant to the market pullback. Like the market pulls back, this is not pulling back as much as the rest of the market. So I like Berkshire for that aspect. And then we have the MACD. We can see that there's some softening on the downtrend. So we're in the sell. We got some selling pressure there. Again, the selling pressure all over the market, but we can see that it started to lighten up within the last day. So Friday it was getting lighter. We can see that Berkshire closed green. And then if we look at that stochastics, again, directional momentum is low at 13. It can get all the way up to 100 before it's maxed out. So Berkshire is one that I have my eyes on as well. All right, it is 6:58, so I'm going to stop here. The stocks that I'm looking at for the week, if you want to just know the tickers, I am watching gold, Bitcoin, and SoFi. So anything related to Bitcoin, Coinbase, MicroStrategy, Riot, XYZ, you name it, I'm looking at those tickers. going into the week. And then I'm looking at SoFi. So gold, GLD, Bitcoin, and SoFi are the other stocks that I'm looking at. Again, I'll be naming some other stocks within Discord. So if you have any questions on those, let me know. Also, like I said, if you're interested in talking more about what the paid side of the Discord looks like, or joining any of the mentorships, what you can do if you can't stay, I know you have things to do. You can reach out to me via email. My email is ladarius18@gmail. Boom, right there in the chat. So if you have any questions about one-on-one mentorship or group mentorship or anything, you can reach out to me there, and then I will get back to you. With that being said, I just want to say thank you to everyone. I know it's been a pretty packed hour with a lot of information. But yeah, if you all have any other questions, just let us know. You can put it in the chat. With that being said, we look forward to seeing you in the Discord in a future session or in a mentorship. You all take care. And let me stop YouTube. We appreciate you. All right, stop the streaming on YouTube.